Good morning and welcome to MoneySense, with your host this morning, Christoph Barnett, Neville Hicks and myself, Simon Caudry. Today's show is dedicated to a discussion on two topics of incredible importance to the Cayman Islands. The first is Cuba, and the second, after the break, healthcare tourism. Here in Cayman, we have a neighbour to our north which has been more or less cut off from the rest of the world for the past 50 or so years. And we're going to discuss what the implications are for Cuba of the relaxation of sanctions introduced by the US. I'm delighted, though, this morning to be joined in the studio by Vikram Mancharamani, who is visiting Cayman Islands for a conference. Vikram is a lecturer at the University of Yale University. That's right. And this is your first time in Cayman, is that right, Vikram?
That's right.
Well, welcome, and thank you very much for joining us.
Thrilled to be here.
I do hope in your short time here you're going to be able to see some of the Cayman Islands as opposed to stuck in studios and at the conference that you're at. But welcome, as I say, to you here. Perhaps one of the things you're most famous for, Vikram, is your book a couple of years ago called Boom Bustology. And in that book, you looked at identifying booms that became busts and identifying some of the causes as to why those booms became busts. Now, I said that we're going to talk about Cuba and we're going to talk about medical and healthcare tourism, but it would be remiss of me not to start off by quizzing you a little bit on seeing, in your view, where there exist current booms which are most likely to result in catastrophic busts. So with that, perhaps I could turn it over to you and you could give us some thoughts as to where you see the biggest risks lying in the world today.
Sure. Thank you, Simon. I'm thrilled to be here, thrilled to be on Cayman, and very excited to share my thoughts. So thank you for having me here in studio. Let me begin by describing what I think is the world's biggest boom that is currently busting, and that's China. China went on an unprecedented credit-fueled investment binge. They are now suffering that hangover. And that is having a ripple effect that is going to fly through the world economy, affecting everything from currencies to interest rates and, of course, commodities. And so this is actually a very big development that's happening right now. Just to connect the dots to the audience here and to show the relevance for those that live here in Cayman, let me describe one of those ripples. There are many ripples, but let me just describe one. So throughout China, they went on this building binge where they built lots of stuff. Airports, highways, buildings, apartments, malls, you name it. They built a lot of stuff. In fact, they built too much. Empty cities, that's right. They built entire ghost cities. And so what we find is that there is no longer the need to build as much stuff. Well, the stuff that went into the building, cement, steel, etc., was being secured and sourced from places like Australia, from South Africa, from Brazil, and from Canada, for instance. Now, these are countries that are all going to suffer the slowdown of building. Let's just take, again, one commodity and focus in on that to illustrate the point. And so this one ripple I'm going to talk about is China was the incrementally most important source of demand growth for oil. That means that on the margin, every extra barrel of oil sold in the world, most of it was going to China. Now, when China slows down their economy, they need less oil. And of course, that takes the pressure away from the demand side, which reduces prices. Now, one country that has benefited enormously from having high oil prices was Venezuela. Venezuela supported your neighbor to the north. And Venezuela was a real source of economic support for Cuba. Well, when that source of support evaporates, Cuba is left with perhaps a different negotiating position vis-a-vis sanctions and other dynamics. And so it's not surprising to me that in the midst of a low oil price environment, spurred by this bubble bursting in China, that we have a relaxation of some of the sanctions and embargoes around Cuba. And so that, of course, changes the dynamics of what's happening here in the Caribbean.
So let me get that right. You're saying that because of, not necessarily solely because of, but a contributing cause to the disaster that China's finding itself in right now in the terms of the stock market is a symptom of the problems they're facing. The Chinese economic model is slowing. It's still growing quite nicely, but the slowdown in China has resulted in the gradual liberalization of Cuba.
That's right. And I think it's an indirect connection, but it's definitely connected.
So 50 years of sanctions couldn't do it. All that they needed to do was, if you like, stop China's growth a little bit more? I mean,
well, stop the demand for oil.
Right.
Bring down oil prices. Remove the source of strength in Venezuela that was supporting Cuba. Period.
And because
it's an interesting.
So for those who aren't familiar, let's just focus a little bit on that. So Cuba struggled throughout the years to export and to produce goods because of sanctions introduced by the US. Although, let's remember, it was just the US that was doing that, but of course its biggest neighbor, and that makes it challenging. Therefore, Cuba struggled to get enough raw materials or energy in order to produce output. Venezuela, on the other hand, had lots of oil, and in effect there was a trade between those two countries where Venezuela gave to Cuba oil, which allowed Cuba to therefore continue to sustain its communist methodology. And in return, what did Venezuela get in return for that then?
Well, among other things, they got great medical care. Right? I think they actually, Cuba, and we'll get into this in the later half of this segment, but Simon, I think one of the most fascinating developments is Cuba has a really high proportion of doctors per capita. Mm-hmm. So doctors per capita in Cuba are, I think the math I remember seeing is something like 6 or 7 doctors for every 100 people. And these are well-educated, capable doctors. Mm-hmm. So happens to be they're not paid at all domestically. They get paid something around $30 a month. And so this is going to create an interesting opportunity when Cuba is liberalized and the opportunities emerge there. I think one of the big opportunities that I'm sure we're going to get to here will be medical tourism.
Right. Very interesting. And linking the Chinese slowdown through the mechanism of the oil price, therefore the potential liberalization of Cuba, the opportunities that creates. What I'm hearing from you, though, is that the slowdown in China, the lower oil price, actually has, although it helps liberalize Cuba, it actually has potential negative implications for Cuba because it makes it more difficult for them to sustain in the short term their economic growth. Is that fair, or am I misunderstanding that?
Well,
slightly?
look, I mean, so I think the whole Cuba thing is fascinating from an investor perspective, right? Everyone sees it as virgin terrain, underinvested, huge opportunity, built up demand for everything from, hotels and the whole tourism sector that could build out, the real estate opportunity, the consumer hasn't been provided any, the telecom companies are salivating at the opportunity of providing Wi-Fi and other services of data access to any resident there. Automobile manufacturers excited about going there. Everyone that I can tell that's involved with selling to a consumer is really excited, viewing this as virgin terrain.
The cruise ship industry is very excited to include Havana and various other destinations in Cuba, which really have been largely this giant, the biggest island in the Caribbean has been effectively off limits, yep. And you got cruise ships driving around all over it, and yep. that's something that in Cayman is certainly a relevant topic
in discussion. This is a huge deal. It will be a big opportunity. But here's the interesting part that I do want to leave your listeners with. It is a lot of hype today. The reality is, there is not the good legal infrastructure or rule of law that can help with establishing the confidence that meaningful dollars of investment would demand. You don't have a legal infrastructure that can resolve contract disputes. You don't have infrastructure. It's lovely to think that you're going to have a nice 5-star hotel and bring the world's most glamorous tourists there, but the airport may not be able to accommodate the inflows that they want. You want to bring the big cruise ships? Great. You need ports that can handle that. Well, that's not quite there yet. Yeah. You want to transport people around the island? Do you have enough capacity in terms of taxis or other services that could handle it? It's not clear. What's fascinating to me is Cuba today is one of the largest and fastest growing markets for Airbnb. Precisely because there is a lack of hotel capacity there, Airbnb is signing up thousands of rooms where people are willing to lease out their room for a night or a week, etc., to inbound tourists. Yeah. So I think there's some interesting entrepreneurial opportunities. They just may not be the ones that everyone's focused on.
In 5 minutes there, Vikram's managed to hit upon the two touch points of Cayman society, which are causing massive controversy right now: building ports and Airbnb. So thank you to that one. We haven't told you as to the controversies that's causing in Cayman, but good one on that one. I want to sort of focus a little bit on what you're saying on Cuba, because you said something there about how it's very difficult for an investor there investor who puts money in or makes, say, an investment to enforce the contract that they're doing. And so that's a concept of property rights that we've discussed on previous shows about if you're trying to make an investment somewhere and it goes wrong or something is in dispute, how are you going to be able to enforce your claim against a third party? And what you're saying, and I think what I heard you say is that that's very difficult in Cuba to do.
Well, it's unestablished. Okay. There is not a good history. There is not a formal process or infrastructure to handle these things. And so it's just more complicated. I'm not suggesting it's not worthy of pursuit. I'm just saying don't fool yourself that there's easy pickings here in terms of low-hanging fruit. It's just not there yet.
I don't think they've established kind of how they're going to allow foreign investment to flow into Cuba, which I think, you take a society that's been largely frozen since the late 50s. It's not, you can't flick a switch and expect, it to be what Cayman is today or what Miami is like. Everything kind of takes time, and I think that's kind of where you're going with. There's a lot of hype and excitement, but it's one of those things that this is going to be very gradual, and I think it needs to be for the Cuban people as well.
That's right.
Well, and let's not forget that there's a whole series of claims that are pre-existing that need to be settled, property claims of dispossessed properties, outstanding bonds and debt payments that were defaulted on. I mean, this stuff still, in theory, trades. You can buy a bond at cents on the dollar, and perhaps you might get something out of it when they finally resolve these things. But I think, interestingly enough, the settlement of those disputes and those claims will sort of set the framework then for the future contracts.
That's right. Yeah, I think that's right. I mean, in fact, you see some of the Cuban capital that's flying out today is going to repay debt to Russia and other countries. Mm-hmm. So I do think that's an interesting dynamic under the surface as to how will prior claims be resolved, which will set precedent for how future conflicts may be handled.
An interesting, while you were talking about that, a counter analogy to what you were saying there about how it's uncertain at this moment in time as to how claims would be settled in Cuba were there to be disputes. And obviously there will be disputes about, maybe you want to build a hotel or something like that, and someone will say, well, this is my land and such like. The counter analogy there, perhaps, is one of the things that here in Cayman we pride ourselves on is having an established rule of law, and it's very clear if you have a dispute what the process is to resolve that dispute. And so I think that's something that's worthwhile everyone keeping at the back of their mind, because in Cayman we market ourselves as having that English traditional case law system, and Cuba obviously doesn't have that history. So that's something that investors need to be cognizant of without any question. In a couple of moments we're going to take a brief break, but before we do so, you've mentioned about the oil price and what the fall in that and what that means. Other places in the world as a result of that which could be under stress as a result of booms that have built up? Where else should we be fearing about?
Sure. Well, let me point to one part of the world, Simon, that I believe there are some expats here on Cayman from Canada. So Canada is, I believe, one of the world's most vulnerable large economies today. And I say that for one simple reason. The oil price cracking is going to take away the predominant engine of job creation in that country. If we look back and look at unemployment rates 2009 to the present in Canada, it looks like on the headline number there's been a massive improvement, lots of job creation. However, if we were to remove all the jobs that were created in Alberta, which is the oil province, the oil sands, what we find is that most of the job creation that took place over the last 5 to 6 years in Canada took place in the oil industry. So step one is oil price cracks, job creation goes in reverse to job shrinkage. Number two, you have some of the world's most expensive housing in Canada. Vancouver is the second least affordable city in the world. So that's another point to say. And that's being set by foreign buyers setting prices. But underlying all of this is a Canadian consumer that has taken out lots of debt, too much debt. In fact, Greek debt, household debt as a percentage of disposable income, is comparable to that in Greece. So that's a ratio that very, very few people think about. Canadian household debt as a percent of disposable income is around 170%. Greece is around 180%.
Wow.
This is a levered consumer. It happens to be benefiting from really low interest rates today, so the math works, but it won't work if rates rise. So it's something to watch. And anyway, I'm very nervous about the Canadian housing bubble bursting and all the consumer recession that will follow.
Vikram, thank you very much for that. We're going to take a short break now. Join us in a couple of minutes when we'll talk more with Vikram, this time about the healthcare market and medical tourism. Welcome back. Today we're joined by Vikram Mancharamani, lecturer at Yale University, who's visiting Cayman, presenting at the CFA Institute conference. Vikram, thank you very much for joining us today. Earlier on in the show, we were talking about the opportunities or threats presented by the collapse in China and the corollary and what happens next. And you mentioned that Canada is potentially at risk because of the debt burden that it's facing. I'd mentioned right at the beginning of the show that we were going to spend a little bit of time talking about medical and healthcare tourism. And I know you're coming back to the island in January for the Fidelity conference. And I think one of your topics at that is going to be talking about the medical tourism and how this is actually potentially an opportunity for investors to think about. It's something which is a demographic opportunity and an opportunity in many other respects. So perhaps you could just give us a summary of the thesis which leads you to think positively about this particular industry.
Sure. So one thing I'll say, Simon, is everything we've talked about in the first half of this segment and what I talked about last week at the CFA event was very simply that the world is chaotic. We have all these cross currents. I could tell you about what's Middle East instability, a China slowdown, debt and excessive debt, Europe on the verge of cracking, commodity prices falling, Australia entering perhaps a recession, Canada falling apart. We could go on and on. South Africa having issues.
You promised us you were going to be positive in the second half.
Sounds like a great world we live in, doesn't it?
So South Africa's falling apart. I want to make sure I touch on most of the expat community
But
here.
Cayman is doing great. Yeah.
So
we can also talk about how that could have some issues too.
So what you're saying is anyone from South Africa, Australia, New Zealand, Canada, who's living in Cayman, stay here, don't go home because your country's about to go down the toilet. Is basically the summary of...
Well, and yes, I think that's part of the story here. Yes, I'm trying to promote Cayman, so this is it's a good part of the story. But look, the other way to think about this is those are all short-term dynamics. In the short term, all of this cross-current, the negativity, this is ultimately noise. And so I think what we really want to do is look for the signal. And to look at the signal, you need to look out further. And this is going to be the topic of what I discuss when I come back to the island in January for the Fidelity CEO event. It's going to be, hold on a second, if we look out further, what you may be seeing is actually real positives coming out of some of these negatives.
Right.
Let's just take China.
What do you define as short term versus long term in your mind?
Yeah, Neville, in my eyes, more than 3 to 5 years out is what I would say is sort of exceeds the horizon of any short term capital markets oriented individual, and that's where you'll get insight.
Right.
So I think 3 to 5 years plus is sort of the way to think about it. Less than that is sort of probably very difficult to predict in my eyes. Too much uncertainty. But let's just take the China story. China, slowdown, overbuilt. What I didn't talk about earlier, and what I didn't talk about very much, was under the surface of this building bubble bursting is a consumer boom brewing. And there you have the consumers starting to get more income. You're developing a middle class. And you know what? That middle class wants to buy stuff. They want services. They want to travel. By the way, that travel will probably benefit Cayman in the long run with tourism bounty. They want to buy financial services products. Okay, that'll also help here. And ultimately, every single person in a middle class goes through a migration, and migration begins with I only have enough money to pay for healthcare when I'm urgently sick. Emergency care. Over time, you get a little more money in your pocket and you say, you know what? I'm going to get a vaccine for my child because I don't want her to get sick. Over time, you get further and further along. Mm-hmm. So you'll find that over time, medical expenditures rise very rapidly, particularly when a middle class emerges. Further, another dynamic that transpires is you get, of course, consumers start consuming, emerging market middle class consumers start consuming a Western diet that's more rich in animal protein. Well, Western diets produce Western diseases. And so you will have another driver of medical care there. And so ultimately, I think one of the most interesting opportunities for smaller countries, smaller populations, and smaller geographies is to tap this growing and what I would argue is a freight train that's unstoppable of demand growth for medical services.
And when you say that, you say there's going to be a demand in smaller communities or smaller countries, to service that need. Here in Cayman a couple of years ago, we set up Healthcare City, or when we say Dr. Shetty set up Healthcare City, and I guess the philosophy there was presumably directed towards the US market, looking at the stresses that the US consumer is under, looking at the somewhat dysfunctional healthcare system in terms of the insurance marketplaces and the lack of a single government-run healthcare system. That's not the dynamic you're talking about, though, in your philosophy. You're talking about the transition of individuals from being poor to being middle class, and therefore consuming more from that perspective. But what's your...
Yeah, so there's multiple drivers.
Right.
What I was suggesting was that all that negativity I'm talking about in emerging markets and China specifically actually could be reinterpreted as a positive, because there will be under the surface a consumption boom. So that's one driver of medical tourism. The other driver is absolutely the demographic dynamics in the developed world. We have an aging population in large countries and large economies that are frankly inefficiently run. And so this is hitting at what you're talking about, Simon, which is the U.S. medical infrastructure or medical system, let's say, is really screwed up. It's just complicated. It's expensive. It's not efficient. And you hear stories of some medical tourists. For instance, there was a patient that wanted to get, I think he needed some heart surgery, didn't have the appropriate medical coverage in Texas, and it was going to cost $260,000 to have this heart procedure completed. I think he ended up going down to Colombia, of all places, and had it done for $30,000. When you start seeing savings of 80-90% on basic procedures, it's not surprising. For instance, there are U.S. medical insurers that have deals with Asian hospital chains where they will send patients for a hip replacement to Thailand, or send patients to Apollo hospitals in India, or send patients abroad to Parkway hospitals in Singapore, etc. So this is a business that's booming and will continue to boom. And so Cayman's location close to the developed world markets of the U.S. and other countries, I think, is a real advantage.
I think there's that too. I mean, and that I think that really kind of bodes well. And we're certainly in Cayman. It looks like we're ahead of the curve with having the health city set up and now running. And I think somewhat of that. Hopefully, I guess we're hopeful that kind of first mover advantage in Cayman being so close to the U.S. will start driving traffic this way. I think it's a matter of how will the other infrastructure in the island support the additional flights and tourism.
Totally important point, that. And I want to take something you said at the beginning of the broadcast, Vikram, where you talked about the trickle effect of, and you used the analogy of what's happening in China, the trickling effect into Cuba and potentially into Canada. What is the pathway for the average investor to look at and say, okay, I can see this demographic change. I can see this middle class economic growth change. And those transitions, will lead to a higher demand for healthcare and lead to a higher demand for medical services. So that makes sense to me. Well, therefore, there's going to be more hospitals built. There's going to be a need for a different type of service provision. Where does that then trickle down to next? Has your studies, has your research taken that to the next step? And how does someone say, okay, those are things that are going to happen? It seems fairly obvious. The waistlines are increasing, the prevalence of diabetes, heart attacks, they're all on the rise, particularly in the Western world. So that's fine.
Waistlines.
In the emerging world as well, by the way.
Right.
Let's not fool ourselves. India has serious problems on Western diseases emerging as their diets shift. So just a point of clarification, it's not just a developed world problem.
So so my question then is, if it's, and I think listening to you, I think we can all be convinced that that's going to be happening. So what does that mean then for someone who says, okay, well, I buy that argument. That seems to me to be a very rational argument. How do I make an investment decision based on that? And where do I start to invest? Do I invest in insurance companies? Do I invest in healthcare providers? What's the next step for
Sure.
investors?
So there's a whole bunch of ways you can think about this. The way I think about it is there's a whole value chain associated with a particular trend or dynamic. And in this case, we're talking about an explosion in the demand for medical services from a price-conscious consumer. Let's just say that. So therefore, big, bloated insurance and bureaucratic-heavy geographies such as the U.S. Will likely be less competitive. Although with that said, I will tell you the U.S. is still a major medical tourism destination. Middle Eastern wealth comes to the U.S. to the Cleveland Clinic. Middle Eastern wealth and other global wealth come to the Mayo Clinic for healthcare. So the U.S. is inbound as well as outbound. But what I would say is, so from a specific investing perspective, there are publicly traded hospitals that play on this dynamic. Whether they're in Thailand or India or Singapore, there's some that you can invest in directly if you wanted to believe in this trend. Secondly, there's going to be the infrastructure related to it that most of these hospitals don't have hotel-like infrastructures around them yet. There will be. Of course, there are also processors. There are actual travel agency-like organizations that will arrange for a hip replacement overseas with a 2-week vacation. Or here, you need a heart replacement. We'll get that set up for you while you're there. We're going to set you down, go see the historic section of town, sit on the beach for 2 weeks, get a massage. We're all good. Move on. So there'll be a processing, and of course, there will ultimately be the insurance and the financial side of this, which I think is still being figured out. There's some innovative models being pursued in the U.S. insurance market and overseas insurance markets, but I don't think that's been fully figured out. Now, the last point I would make is, much as it seems like it's a great opportunity for here in Cayman, the reality is Cuba, which we started with, I just double checked the stats. It's 6.7 doctors per 1,000 in the population. Wow. But given that and the $30 per month wage that a doctor in Cuba is able to earn today, you have to believe that Cuba will emerge as a medical tourism destination.
So the best business would be opening a shuttle business from Miami to Havana.
Well, this is exactly what Neville and I were talking about earlier today, which is if you really want to be an entrepreneur, let's get a high-speed boat connection. Florida's filled with, I'll say it kindly, the older generation in the United States. They retire there. They need medical help. The infrastructure's not great. The costs are high. They like the water. That's why they're there. They like the weather. They want to visit Cuba. Get the heart surgery done, get the knee replacement done, get the hip fixed, whatever it is, take a nice cruise. So yes, you can start a shuttle service.
There we go.
I like the idea of what you said, both of you, Neville and Vikram, about the entrepreneurial idea. And I think it's something that anyone listening to this broadcast can think, look, here in Cayman, we've built out what's only the first stage of a multi-stage process. But just think about that value chain idea. Think about, well, there's that infrastructure of a hospital. What else needs to go around there? How can someone who's thinking, I've got some spare money, I want to go in business with a couple of partners, what could they provide around there which would meet the needs of people who have loved ones or other who are going to that hospital? So that's an entrepreneurial opportunity that I think isn't necessarily a public market, but is something that people can still invest in by thinking what locally will be necessary to provide for that.
A spectacular point, because the social doctors coming will want schools for their children. They'll want restaurants to go to. They'll want to have all the infrastructure relating. So anytime a population grows in a particular small geography, there will likely be social infrastructure needs. So that's a huge opportunity, and I'll be talking more about that as well in January.
Yeah, Vikram, look, first of all, thank you very much for joining us. And
thank you.
It's been a most interesting conversation. We've touched on so many different things, and I'm pleased that we've ended on a relatively positive note after the calamity of affecting the Canadians and the South Africans and the Australians. Now, I know you're back in January at the CEO conference, which I believe is January the 19th. Yeah. Hopefully that will coincide with one of our broadcasts around then. We'll be delighted to have you back on the show. But for those who are who are listening, who would like to hear more and listen to more, Vikram does have a website, and that is?
It's www.manshurmani.com. It's manshuramani.com.
Great stuff. So log on to that website, listen and read more. Otherwise, send us an email to moneysense@candw.ky. Thank you very much.